There we go. Good morning, traders, from, well, a very cloudy Cape Town. As you can see, I am still in my office as my studio is still undergoing some maintenance. So again, the environment looks a little bit different. I hope you can all hear me loud and clearly. If so, please let me know. Also, let me know where you are logging in from. And if you are watching the recording, even put that in the comments for me as well. So today is Thursday, the 16th of October. And well, I've got a question for all of you. Do you ever get that feeling when the markets throw you a curveball and then suddenly everyone's pretending they saw it coming? Let me know. I would appreciate your feedback. Was it just me? Where, whenever the markets does something, it's like everyone had hindsight. It's there, they all saw it. So anyways, that being said, today in a nutshell, if we have a look, we saw dollar dips, natural gas take a bit of a breather, and we also saw the FTSE 100 is caught somewhere between optimism and tax headaches. Now, we are going to unpack everything that I just discussed or just mentioned here during the session. We're going to see what to be watching for today in the markets. Now, if you also have any questions, you are welcome to ask, and I am more than happy to answer, assist, and also go through various analysis and potential setups with you here today. That being said, please take into consideration that nothing that I am discussing here today or will be showing to any one of you here today is financial advice. Everything that we will be covering is for educational and informational purposes only. So as long as we stick to those guidelines, we are good. So let's get into today's market brief live. So as always, for those of you who don't know, I'm Francois, I'm your market analyst here at ATFX Africa, and during the market brief, we unpack the biggest market movers across currencies, commodities, and indices, blending some fundamentals and technicals, and well, just a little bit of common sense. Because let's face it, markets don't always make sense. So let's kick things off today with a little bit of local is lacquer, where we're gonna discuss USD ZAR. Now, this specific currency pair has been on a bit of a roller coaster lately, and not the fun kind, more like those ones that feel like you forgot to fasten your seatbelt. So it actually spiked up quite significantly at one point, during which it briefly touched 17 Rand 50 cents to the dollar again, and then we saw the pair pull back. Currently now trading around 17.30 to 35 range. Now, both political and trade rhetoric has kept traders on edge here. Now, if we have a look, the US dollar index fell below 98.5. This is also making it its third straight session that it has moved lower. And that is thanks to a cocktail of US-China trade tensions, ongoing government shutdown, and increasing bets that the Federal Reserve will cut rates in 2 weeks' time. Now, possible multiple times this year even, and then we also have President Trump, who didn't exactly smooth markets either. When asked about China, all he said was, "We're in one now," and that's a direct quote as well. So meanwhile, the Treasury Secretary, Besant, hinted at a possible truce extension, but only if Beijing holds off on new export controls. Now, if we have a look back home in South Africa, mining output unexpectedly fell in August, its first contraction since April. And that gave traders one more reason to stay cautious looking at USD ZAR. Now, let's pull up a chart. Let's have a look at what's actually going on, and then we can go from there on forward. Again, please feel free to comment, interact, and let's see how we can, tackle the markets today together. So, looking at USD ZAR, looking at the technicals, we can see that it is continuous. It is currently, respecting a relatively tight range, where we have support sitting here at 1727. We have this resistance, which is that high point that we saw on Friday, and then again on Tuesday, which is around 1750. And with a, but there is a smaller, so let's look at some smaller time frames as well. I want to drop down to about 30 minutes. So maybe let's go even lower. There we go. So if we do have a look, there is a smaller resistance, which is sitting around here, which is that 1738 to 40 level. Now, if markets can actually break above that, so obviously I'm on the 15-minute time frame at the moment, and if we do look at a small break above this, that could lead to a retest once again of this resistance level here at 1750. And obviously, if that gets broken, we can then go 1760 or even this strong high here at 1782. So various options available to us on this one at the moment. Now, again, going back to those lower time frames, should we actually break this little setup over here, which we are currently seeing quite a nice bounce, I must say. So there's this bounce higher, so that will obviously potentially take us back up to that resistance, where if we see proper rejection, there's a potential setup that could potentially look something like this. If we can see some nice rejection, stops around there with a potential target just back at this trend line over here, which would give you a decent 2-to-1 setup on that as well. Now, obviously, if it breaks here now, there could be a different setup if we see a bit of a break of structure here, which would then, again, aim for these lower points. This would be a bit of a higher risk setup with a potential, I would say, about evenly weighted, 1:1 potential on this one. But that could also be something to look at. And then obviously, if we do break that, there is a potential for us to push all the way down to this 1740 level. Now, as we, have a look at the currency pair at the moment, we can see, obviously, we had some sharp swings during this week. There was this dip to 1727, massive move up, back down. But it is still not as bad as that massive move that we saw on Friday. So that momentary panic is seeming to cool off. But, let's also be honest about it. When Trump's tweets can move markets the way they do, calm is always temporary. So, as a question, and I would love to hear from everyone in the comments and the chat section, leave me your thoughts on this. If the US, let me switch to this. So, if the US keeps debating with itself over spending while trade talks drag on, do you think emerging market currencies, like for instance the ZAR, will keep its cool? Or are we currently just seeing, that eye before the next massive storm? Let me know. Would love to hear from you. That being said, let's move over today to commodities, and I want to kick things off today with natural gas. Again, if there's any commodities you want me to look at, so if you want me to have a look at gold or silver or anything like that, drop me a comment. Happy to look at it as well. So, natural gas prices have actually been oscillating like a thermostat in a confused household at the moment. So it's up one moment, it's down the next, and this is specifically after dipping to a 3-week low around $2.85 per million British thermal units. I always have to say it a little slowly because I do get confused. But prices also ticked up slightly from there to $2.92, suggesting that traders aren't ready to write off the bulls just yet. Now, when we have a look at what's driving this movement, it's not just the weather forecast, if I can put it that way. The mild conditions across the US have cut into heating demand. So if we do have a look at the weather in the US, it's not cold enough at the moment, which is really starting to affect the demand for natural gas, which is obviously affecting the price as well. Then we also saw storage levels are roughly 4% above the norm, keeping supply of the specific commodity as well very, very comfortable. Now, production in the lower 48 states of America has also eased marginally to around 106.4 billion cubic feet per day, while liquid natural gas exports improved after Berkshire Hathaway, so Warren Buffett's company, they own a separate company called Cove Point Thermal, and this kind of resumed operations. So this has, added to a little bit of optimism. However, the weather outlook suggests limited heating pressure until later October. So this means that prices could remain underwhelming in the short. However, traders know that the natural gas market can pivot very quickly. Historically, the northern hemisphere's edges closer to winter. So as we now, because remember, here in South Africa, yes, we're in spring at the moment. They're in autumn. So by the time we get to summer, that's winter over there. So as we are getting closer to December, it is getting colder in the northern hemisphere, and this increases demand for natural gas because of the fact that it is used to heat up local households. So that demand could start spiking sharply. So at this point in stage, this could be a longer term buy the dip opportunity. And my biggest thing here is just, if you are trading this pair, don't get caught off guard, shorting this going into winter and then demand increases and you're on the wrong side of the trade. That'll kind of be the only thing that I would kind of look out for here. Having a look at the charts at the moment, we can see support is sitting here at around $2.90. It has pushed up a little bit in the last hour as well. And even if we look on a larger time frame, there is this nice falling wedge pattern. So again, there is this opportunity for a bit of a bounce here where we are now. If we see a nice little change of character around this $2.99, basically $3 level, then we could see a bit of a move back up to this resistance here at $3.12, which then could lead us to the top of the falling wedge at around $3.30, $3.40 at the moment. But let's not rule out anything. There is also the opportunity for a push down to this lower support here at $2.77, 76, as well as the bottom of the actual wedge, which is sitting around $2.55. So these are all still options for us on this specific commodity. Now, another analyst as well, Christopher Lewis, pointed out in his outlook that this market has a knack for dramatic reversals, which I do agree with. Once that cold starts setting in the northern hemisphere, there's normally some larger spikes. Now, if we do have a look on the daily time frame, so just having a look at that larger time frame as well, here you can see we are starting to form, those hammer candles as well, which are those initial indications of strong reversals. So, let's not count out the specific commodity just yet. and as I said, get caught on the wrong side of the market when this starts going back up. Okay, so that being said, if we have a look at that, there's a possibility that we could potentially see some buyers quietly gathering strength all there together at the moment. Again, quick question. So what do you think about this? Will this mild October lull be the calm before a winter rally, or the start of another long hibernation for the bulls? Let me know. I would love to hear from all of you. I do see we are ticking up in viewers a little bit as well for today. Seeing some more likes coming in. I do like that as well. Would definitely like to see some more chats coming in. You guys are extremely quiet today. Like, no one wants to talk to me today. So we can definitely start putting in some comments, some questions. Let me know what analysis you want me to look at, what markets you want me to look at. If you have any comments regarding the markets I've already looked at, let me know as well. I'll definitely appreciate it. Now, let's move on. Sorry, I just want to drink some coffee. My throat is extremely sore. So let's move over to equities. And specifically, I want to cross over to UK equities and not just the normal US equities that we always focus on. Now, obviously in the UK, the biggest one we normally look at is the FTSE 100, which has slipped about 0.1% and currently trading around 9,400. Now, this is as traders weighed fiscal pressure, tax speculation, and mixed corporate updates. So let's break that down. So starting off, Chancellor Rachel Reeves hinted that the government might need to raise 30 billion pounds. Guys, do you know how much money this is? Raise an additional 30 billion pounds, and they want to do this through a combination of tax hikes and spending cuts just to balance their books. Now, with borrowing costs rising in the UK and welfare cuts that's completely been scrapped, the current landscape is a recipe for caution heading into the November 26th budget meeting that will be taking place in the UK. Now, at the same time, markets are betting on no rate cuts from both the Bank of England and the Federal Reserve in some ways. So we are betting on those rate cuts. Sorry, I misspoke. I said no rate cuts. I'm actually just hearing myself now. So let me rephrase that. Markets are betting on rate cuts, not no rate cuts, betting on rate cuts from both the Bank of England and the Federal Reserve. But the IMF is urging the Bank of England to start trading a bit more carefully, warning that UK inflation will likely remain at its highest throughout the G7, and this would be, all the way to around 2026. So they are warning that actual inflation could just stay up there and it will be the highest of any one of the G7 countries. Now, if we have a look at the corporate movers, Entain fell 2.4% after weak gaming revenue. Burberry, not Blueberry, Burberry jumped 3.1%, buoyed by Moët Hennessy and Louis Vuitton, which showed really strong luxury sales. Now, if you didn't know, Burberry is the owning company of LVMH, if I got the abbreviation correct, which obviously LVMH stands for Louis Vuitton, Moët, and Hennessy. So then we also saw IAG, which climbed 0.6% following the bullish movement from Morgan Stanley. And so if we have a look at all of this, while fiscal tightening could cloud the current outlook, Selected corporate strength is keeping the FTSE from losing its footing entirely. Now, if we do look at the charts at the moment, there are some interesting things happening right at this specific moment. Now, we can obviously see, why is that showing the wrong chart? Let me just try and load that again. Sorry about that. Let me just see here. Why is it not loading my correct chart? It's showing S&P 500. It's not supposed to do that. Still showing the S&P 500. That is really, really weird. Because on my screen that I'm looking at, it's not the S&P 500. And even when I'm changing, for some reason, it's not changing with it. So sorry about that, traders. Just give me 1 second as we sort out some technical difficulties here. There we go. Okay, now we're up and running. There we go, cooking with gas once again. So, okay. Good morning. Possibly a brief recess before resuming. Very true. I like that comment. Thank you for that. Appreciate it. Okay, so if we are looking at the FTSE at the moment, you can see we've got quite a bit of volatility, but obviously the Frankfurt Stock Exchange also just opened. So that would definitely cause what we are seeing now at the moment. And we can see here that it is trading right on this resistance zone here at 9,420. Now, if it breaks this, it will easily push back to, in my opinion, back up to this resistance here at 4,990, which is these highs here, and then we will see probably some more resistance coming into market. But if it breaks there, it could go test these all-time highs at 9,580. Now, if we go on a lower time frame, we will have to see a break below, I would say, this area here at 9,390 before we'll be able to see a push lower to the support here at 3,950. But at the moment, momentum is a little bit mixed. If we have a look at the general price structure of the specific index, yes, there is on a much larger time frame, we can see that larger bullish momentum, seeing some pullback. But looking at it from an intraday perspective, we're seeing quite a bit of consolidation. Now, if you obviously attended last night's session, that consolidation normally means that build up towards where we are actually potentially heading from once we experience a breakout, okay, if that makes sense. So we can see traders are currently in that wait and see zone. So here's a question for you. With inflation still biting in the UK, plus fiscal tightening on the table, what do you think? Will the FTSE find fresh buyers, or are we due for a larger correction before that next leg higher? Let me know your thoughts. I would really appreciate it. So we've been live now for about 25 minutes. I have seen some comments come through, but no analysis request today. Traders, you are so quiet today. I know I'm a little early today. I do apologize for that. Normally the sessions are at 10, so there's just a lot planned for today. So apologize about being live a little bit earlier, but I kind of thought people are on desk from 9 o'clock, so thought we would see more. But I guess as well, most of you are probably used to me only coming online at 10. So we'll try again next week. But again, to those of you who did join me today, thank you so very much. So as we kind of end off the session, then unless there's any questions, if there's questions coming through, I'll stay. I don't mind. But now, as we close off the session, we're obviously heading into the Friday. We're heading into the last day of the week, and tomorrow we'll see how markets digest that next round of political noise from Washington, and also whether natural gas can hold that level where they are now, because as well, it is currently trading just below that psychological $3. So we kind of have to see a push above that. Otherwise, there's not going to be any real bullish movement coming into the market. Now, we will also see the FTSE pre-budget chatter that might start heating up faster than, a London cab fare and rush hour. But again, those are all possibilities. So if there's no other questions, that kind of wraps up today's Market Brief Live, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. You can go and experience the difference for yourself by heading over to ATFX Africa by clicking the link in the description below, and go and experience that difference. Go and see what tier 1 liquidity can do for your trading. And then traders, until next time, stay sharp, stay focused, and trade smart.